Hello everyone, welcome back to the channel. I have an update for you guys. So yesterday we covered the second largest bank failure in US history with the collapse of Silicon Valley Bank. The largest collapse was Washington Mutual back in 2008. So this graphic here, this was from yesterday. It shows all of the bank failures since the year 2000 represented in graphic form. So we are going to need to add another bank to that now. We had the third largest bank failure in US history with the collapse of Signature Bank. And now we have sort of a contagion spreading to regional banks. And we have another bailout coming. We will get to that in a second. But before we get to that, I wanted to bring this article up just to kind of highlight some problems that I see that kind of face other countries as well. Now, this article is specifically about the UK. And they're saying, hey, look, the UK is going to face at least a decade of a bad economy because they have a lot of issues here. So they're saying a lost decade worse than Japan's threatens to change the UK forever. Crumbling infrastructure and overstretched services are symbols of Britain's economic stagnation since the 2016 Brexit vote. But I'll tell you, it's not just Britain. It's many countries that have sort of the same issues here. So he says, as the UK buckles under the strain of anemic growth, strikes, fraying infrastructure, and record hospital waiting lists, Jason James thinks back to another economic crisis that dominated the earlier part of his banking career, Japan's infamous lost decade. He spent the 90s working for HSBC in Tokyo's Nihabashi financial district in a period that suffered a 60% slump in stocks and a collapse in land values that led to zombie banks and an economy overwhelmed by bankruptcies and debt. But his conclusion is that Britain in the 2020s feels worse. Well, this is not just Britain. There are many, many countries facing very similar conditions, and I would say he is correct. So keep that in mind. Let's move on, though, to the bailout. So the Fed is not calling it a bailout. They are saying that they're going to introduce $25 billion in funding to backstop banks. The Federal Reserve established a funding program for banks, making $25 billion available to eligible firms in a bid to avoid further banking liquidity issues. Okay, so I have a couple comments about that. First of all, this is the same thing we saw them do in the past. They're just not calling it that, where they privatize the gains and socialize the losses, meaning all of these people that gambled with money and engaged in high-risk behavior, they made record money. They made millions, billions of dollars. They got to keep those gains. You didn't get to see any of that profit, but you are going to pay for the losses. Socialize the losses, meaning the taxpayers are going to pay for this bailout. So capital requirements for banks are from a distant era. And the problem is that these days, institutions are taking massive risks, so much so that even small interest rate hikes renders these institutions insolvent. That is a problem. The excuse for this loan is the hope that the economy will be back to normal in a year, meaning that this is like a bridge to get these banks to next year. The problem, again, though, is where is this money coming from? Will it ever be paid back by companies that are already distressed? And what if the economy isn't any better in 12 months? Now, we've had basically 4 banks blow up in 1 week. We're going to have one, maybe more this week, I think. So it's important that we realize we're getting privatized gains, socialized losses. They're trying to provide liquidity to banks, but you've got a lot of stuff going on right now. You have problems with auto loans, with real estate, with tech. Everything is declining. So we've got trouble with these banks. I think we're going to probably be looking at a 20 to 30% fall in the market. Now, for Silicon Valley Bank, HSBC acquired the UK assets of Silicon Valley Bank. I'm not sure what's going on with the rest, but we should note that the Fed enables this behavior just like they did during the subprime mortgage crisis. They enabled all of that. Where were the regulators then, right? Where are they now? Good question. So let's move on. We had this article from Fortune magazine. After Silicon Valley Bank failure, there's going to be more, warns former FDIC chair William Isaac. So he's saying, yeah, there's going to be more banks that fail. And we got that. We got Signature Bank, and possibly First Republic will be next. Signature Bank shut by regulators after SVB collapsed. That was the third largest bank failure in U.S. history. Now, Monday morning, as the Asian markets opened up, the dollar dropped as Fed rate hike expectations were trimmed on the collapse of Silicon Valley Bank. So, it's looking like the Fed may not raise rates again when they meet in March 22nd. So that's why the dollar fell. These expectations, the Federal Reserve will be less aggressive in raising interest rates after authorities stepped in to limit the fallout from the sudden collapse of Silicon Valley Bank. The U.S. government announced several measures early in the Asian trading day, saying all SVB customers will have access to their deposits starting Monday. Oh, everything's fine. Nothing to see here. The market turmoil from this collapse has led investors to speculate the Fed will no longer raise interest rates by a supersized 50 basis points this month when they meet again in late March. Okay, so let's move on. The dollar dropped a little bit. It just slid a little bit, but we have another article from 2 days ago from the New York Post, why the US dollar has become an at-risk currency. Now, I think we talked briefly in yesterday's video about BRICS. BRICS is a consortium of nations. It's Brazil, Russia, India, China, South Africa that have put together sort of a coalition. And what they want to do, it's like an economic trading bloc. What they want to do is create like a competitor to the US dollar. All of those nations have been stockpiling gold, so they'll probably have it some kind, probably not directly backed by gold, but pegged to gold in some way. So China has been, challenging the United States in many ways. This is just one of them. So China recently, they organized an alliance between Iran and Saudi Arabia. The United States wasn't involved in that at all. So that's China showing, hey, look, we can be like the United States. We can be the world superpower. We can dictate alliances and we can kind of facilitate this stuff and finesse it. While Joe Biden is, bumbling around in the basement or whatever. So there's that. And China had been in talks with Saudi Arabia. Prior to that, Xi Jinping actually visited Saudi Arabia to discuss doing oil trades stopping having to use the petrodollar. So Xi Jinping was talking about a petro yuan and possibly trading with that with Saudi Arabia. They also have the Belt and Road Initiative and many other things that they're doing right now to challenge the United States and the unipolar world order. Okay, First Republic Bank employees fear job losses as the bank nears collapse. That was from yesterday. Of course they do. We had regional bank shares down pre-market before the market opened. As we just said, investors are speculating that there will not be another rate hike at the next Fed meeting. And that's why the dollar slid a little bit. Credit Suisse's default swaps hit an all-time high per Bloomberg. That is unsurprising. Biden is saying, oh, there's nothing to see here. Everything's fine. Right.
First, all customers who had deposits in these banks can rest assured. I want to rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll.
Oh, really?
Pay their bills and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers.
He's lying. He's outright lying to your face. These people are scum. They're disgusting. He's got no problem lying to you, saying that, oh yeah, you're not going to have to bear any of these losses. Of course you are, because this is a bailout, despite the fact that they claim it's not and that it's just a loan. No, it's not. We all know better.
Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions of that because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them.
Why would they feel confident? Most deposits cannot be covered by the FDIC in the event that there is multiple bank runs, right? The problem with fractional reserve lending, and this is what we said in yesterday's video, we talked about that, is that for every dollar you deposit in the bank, they're not just taking your money and putting it in a vault and not touching it. They lend your money out. So for every dollar you put into a bank, they can loan out 10 more dollars. It's called funny money. They just create it out of existence, and then they can invest it in risky things and other things. So, that's not guaranteed. So I just think this is funny, though, how they've got no problem just lying to people outright. No, you should have concerns about the banking system. We just saw four banks blow up in like 1 week. Silicon Valley Bank implodes in 48 hours. That's how quickly things can change. Of course, people are going to be concerned.
Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore.
Notice he said fired and not prosecuted. They're not going to go to jail, just like none of these people that instigated the last global financial crisis. None of them were held accountable, and it makes me sick. They knew what was happening. I mean, for crying out loud, Goldman Sachs was betting against its own customers. Like, it's crazy. And no one was held accountable back in 2008 to 2010. Not one banker was, subjected to a tactical pre-dawn raid by the FBI. Not one was frog marched out in handcuffs and spent any time in jail. This is why they continue to engage in this kind of behavior. They always find little loopholes where they can still do the same stuff they were doing before. It's ridiculous.
Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works.
And really? Really?
Fourth, there are important questions of how these banks got into the circumstance in the first place.
Oh, yeah, where were your regulators,
We must get the full accounting of what happened and why those responsible can be held accountable.
They're not going to be held accountable, though. You and Obama didn't hold them accountable back in 2010 when you bailed them out the first time. It's amazing to me. I'm sorry, but this disgusts me. I thought this meme was kind of funny, although I am not a big fan of cryptocurrency. I think it's inherently speculative and volatile in nature, but I do think that cryptocurrency can be used for certain things. It does have its uses. I just thought that meme was kind of funny. You've got Silvergate Bank, Silicon Valley Bank, then Signature Bank, and Bitcoin's like, nope, not me. Okay, so Silicon Valley Bank collapse causing panic. Of course, over 30% of U.S. deposits are held in small banks, and over 50% are not insured. Several banks are sinking in pre-market trading. That's what we've seen. It looks like Charles Schwab could be on the verge of collapse. It's not looking good. This is their financials from 2022. We see cash and cash equivalents down 13%. Available for sale securities down 37%. Bank deposits down 7%. We have the New York Stock Exchange halted at Charles Schwab. They also halted, I believe, all regional bank stock trading this morning. This I thought was interesting, and it doesn't surprise me. Thomas Massie talking about how a Democrat wanted to know if there was a way that they could censor information on social media that could lead to a run on banks. So censoring financial information and commentary. That was a meeting with the Fed, the FDIC, the Treasury, the House, and the Senate. Mike Benz here replying to Thomas Massie says, actually, DHS efforts are already underway to add censorship of quote-unquote financial misinformation to CISA's portfolio of critical infrastructure domains. It can classify tweets as a cyber attack and thus censor financial information and news that you need to know about. They call that critical infrastructure. Oh, we have to We have to protect people from, seeing the truth. DHS's censorship subcommittee at CISA is chaired by Kate Starbird. She and Alex Stamos ran EIP and Virality Project. These are the companies that DHS deputized to censor information about the 2020 event that cannot be questioned. And C19, Vijaya Gade, is on CISA's censorship council too. So she was formerly a part of the trust and safety team at Twitter, and she is, a goofball. The real crash usually begins after the Fed cuts rates. Indeed, with the shenanigans unfolding, it makes a ton of sense why the Federal Reserve Bank stopped reporting unrealized gains and losses in April of 2022. Had they been reporting them, you would have seen the major unrealized gains of Silicon Valley Bank. And remember too that what about the executives? What is it? The CEO of Silicon Valley Bank sold his stock in advance of this happening. He knew it was going to happen, so he made sure he got out. That's insider trading, guys. Is he going to be held accountable for that? That's fraud. No, of course he won't. And right before the FDIC took control of Silicon Valley Bank, they paid out a bunch of bonuses. So these are all these regional banks that are down. And it's a good question. Will we be backstopping them all? Are we going to bail out all of these banks, these regional banks now too? First Republic dropped 60%, leads decline in bank stocks despite the government backstop of Silicon Valley Bank. Of course. Continuing on, Credit Suisse default swaps hit record as SVB failure hits banks. Credit Suisse is in very bad shape. On my second channel, the Radix Report, a few months ago, I did a video going through all the different scandals at Credit Suisse. I encourage you guys to go watch that. If you're not subscribed to my second channel, please do so. I have that channel linked on my homepage. And if you're not subscribed to my channel, please do so if you find this information informative, and like the video if you enjoyed it, and comment. Any little bit helps. A former Obama official worked at Silicon Valley Bank before the collapse. Of course they did. We also had a guy he used to work at Lehman, that was a senior executive at Silicon Valley Bank. So it's unsurprising. It's like the same people engaging in the same thing. Wow, who could have guessed? 2-year Treasury yield posts biggest 3-day decline since the aftermath of the 1987 stock crash. Investors swarmed into U.S. government bonds Monday after the collapse of Silicon Valley Bank and subsequent government backstopping of the entire banking system. The rush sent Treasury yields tumbling. Okay, we have Xi Jinping vowing to protect China's economy and security, and saying basically economic security is national security. We have the Ides of March. I just, this might be a little conspiratorial, but I wanted to include it in here because I thought, oh, wow, they always use symbolism, and they kind of put out there what they're doing, or they do weird little things like this. They'll do certain things on certain dates, and it's supposed to have some symbolic meaning. So the Ides of March were, apparently in Roman times they considered the Ides of March a deadline for settling debts. How crazy is that? And we're 2 days from March 15th, from the so-called Ides of March. And I think that Julius Caesar was assassinated on the Ides of March. Yes, in the year 44 BCE. Very interesting. I just thought that was weird. Okay, U.S. regional banks remain under pressure as First Republic sinks. Indeed, turmoil continued to engulf shares in banks as investors rush to reduce exposure to the banking industry after seeing equity stakes wiped out at Silicon Valley Bank and Signature Bank. The collapse of these banks and the seizure by Signature sent tremors through the broader banking system. Yeah, it created some concern about contagion, and indeed that concern seems to have been legitimate. Now, moving on, these are all the regional banks that suffered losses and that were down this morning, where they actually halted trading because of this, as you can see. But we have Janet Yellen saying the banking system is strong. in the wake of these bank failures, everything is safe and sound, and Americans should remain confident in the system. U.S. regional bank stocks are right now, you see all of them down, saying markets are betting Silicon Valley Bank's collapse broke the regional bank system. Regulators wanted it to seem like their quote unquote backstop of Silicon Valley Bank fixed the issue overnight. Their backstop simply exposed a broader issue. Regulators cannot save all banks. Exactly. It seems like SVB is broken the system now. Quick update here was just documenting all of this as it was happening with the regional banks this morning, showing all of that as it occurred. I thought this meme was kind of funny, but it shows something disturbing. We have high inflation right now, while at the same time we're suffering from bank failures, and now we're going to have to bail these people out. And there's going to be a lot of regular people that are hurt by this. As happened in 2018, once again, you're just going to see a transfer of wealth from the poor and middle class to the wealthy. It's what happens every time, just like we saw with the pandemic. Same thing, another massive transfer of wealth. While small businesses were forced to close, these big ones were chosen and allowed to operate. So they pick and choose winners, and then they talk about capitalism. What a joke. But just to show you something that people should have been able to know this and should have been aware of this, right? This was a tweet from October of 2020 by New Low Observer. He says, from 1937 to 1968, bank stocks versus DJIA in rising rate period. Okay, don't make the mistake of believing bank stocks will outperform the market when rising rates arrive. Exactly. Banks should underperform with rising rates, and that's exactly what we saw. Banks versus rates makes you go, exactly, indeed. Okay, so that's all I have for you guys today. I just wanted to cover the continuing collapse of the system, which, I think it's unsustainable. The entire thing has been unsustainable. And of course, it's going to collapse. It's designed to collapse. And I believe that this is going to be used to bring in their new system, their central bank digital currency, their great reset, things like 15-minute cities. This gives them, they always say, like Rahm Emanuel said, never let a crisis go to waste. They use this stuff to roll out their next agenda. And I think it will be something like a central bank digital currency. They've already devalued the dollar so much. Things have gotten so bad. Think about right now, too, the cost of living. And I know I talked about this in yesterday's video. I talked about how, the cost of living has gone up. Cost of groceries, utilities, car payments, all of that, your mortgage, it's all gone up while wages have remained stagnant. So your salary, what you get paid, is not increasing in accordance with the rise in the cost of living. So people are really under pressure. American families are stressed. The consumer is completely maxed out. As I've been saying, look at credit card debt. $1 trillion in credit card debt in just one quarter. That is insane, mostly among millennials who are completely priced out of the housing market. So people are paying right now $800 a month for a car payment, which is insane. Think about it, guys. Your mortgage is supposed to be 1 week's pay, all right? People are paying $800 a month for a car payment. That is a mortgage, folks. People are having to spend more of their salary on just basics, so they have less disposable income. So $800 a month car payment, that doesn't include insurance, that doesn't include gas, it doesn't include maintenance, and things like that. Not to mention the fact that these cars depreciate as soon as you purchase them. So that's just stunning to me. So how much are people spending on their mortgages now? There's a lot of people that are renting, and then their rent payment goes up, and then what are they going to do, right? Utilities are going up. In the UK, their energy costs skyrocketed because of the Russia-Ukraine invasion. They were paying hundreds, and that's causing major problems there. So I just think it's good for people to be prepared. Like back in 2019 and 2020, I was writing an article making my predictions for the next year, and I said hyperinflation, food shortages, supply chain issues, civil unrest, and a global financial collapse. I may have been wrong on the timeline, but I think those predictions are going to be, I think they're going to stand up and hold up over time. I do think we're going to move into hyperinflation. And I do think this is all very concerning. And as usual, privatized gains, socialized losses. That should make everybody upset. But, anyways, you should make sure that you're prepared and that your families are prepared in the event something happens. And look how quickly it can happen. You know, what if you had your money in one of these banks that collapsed and then you couldn't access it anymore? What would you do? You know, bailouts aside, just in the event something like that happened in an emergency. You never know when an emergency could happen. It's always good to have cash at your house, to have emergency food and water, to have some kind of plan, you know, to think about these things in advance before they happen, because you don't want to be like the people that were taken off guard in 2008 to 2010 and were completely unprepared for what happened and lost everything. You know, people had their homes foreclosed on and were homeless and they had no savings. Right now, most Americans, even some that make six figures, still live paycheck to paycheck. They've got no emergency savings. Their credit cards are maxed out. So what happens? There's going to be a lot of people that get hurt and lose everything, because this entire system is debt-based and designed to fail. It's all a Ponzi scheme. That's my personal opinion. Anyways, I want to know your thoughts. What do you guys think about this? If there's anything I missed, let me know in the comments section. You guys are always smarter than me. I always like hearing from you all, and I hope everybody has a good day. I will continue to follow the news and keep everybody posted about this, because I think it's really important, and it is going to be something that maybe it takes time for the impact to be felt, but it's going to affect and hurt a lot of people. So we should be praying. We should be trying to help people in our local communities, and just trying to keep everybody informed about this stuff. Like, let them know, you know, there are major problems here and you should prepare for it and make sure your families are prepared. All right, guys, have a good day.